Welcome back to the Deep Dive. Ready to explore Apple with us today?
Sounds like a fascinating journey. I'm eager to dive into Morningstar's report and uncover those strategic insights.
It's an impressive report, very in-depth. We'll be focusing on their analysis of Apple's current financial health, their strategies, and the potential risks and rewards that lie ahead for them.
Beyond just the numbers, right?
Exactly. And speaking of interesting moves, we've got Apple aiming to design their own cellular modem for iPhones by 2025, potentially cutting ties with suppliers like Qualcomm.
Now, that's a big move. We should definitely unpack that, see why they might be making this shift and what it means for them financially.
Definitely. But first, let's start with this analyst note from December 6th. It zeroes in on Apple's modem ambitions.
Oh, this should be good.
The analyst is William Kerwin, CFA, and he's not surprised by this move at all. He sees it as, well, a natural progression in Apple's strategy.
Control more of their production, right?
Exactly. More vertical integration, like what they did with the M-series chips for Macs.
That was huge, and it's been incredibly successful. And here's the interesting part for investors or anyone who's really into tech. Kerwin actually thinks this in-house modem development is a key factor in his thesis for Apple's gross margin expansion.
So it's not just about being innovative, it's a way to possibly offset price inflation and get a tighter grip on their supply chain.
Exactly. And they're not jumping in all at once. It's a staged rollout. Kerwin points out they're going to start with the iPhone SE.
Smart move. Get those kinks worked out in the more affordable model before moving to those flagship devices.
Exactly. Less risk if there are any hiccups along the way.
But what happens to the companies that are currently supplying those modems if Apple decides to go solo?
Well, Qualcomm is the obvious one that takes a hit, right?
Well,
But Kerwin makes a good point about other suppliers like Broadcom. They might not be as vulnerable as we think.
really? Why is that?
Broadcom specializes in these crazy complex FBAR chips, and Kerwin doesn't think Apple will be able to replicate those anytime soon, at least not easily.
So Broadcom gets a bit of a breather then. But here's where things get interesting. Kerwin actually believes that both Apple and Broadcom are overvalued right now.
Overvalued. But they're both performing well. What's driving that assessment?
I think we need to take a step back and look at Apple's overall business strategy, see where they're headed.
It's about understanding the power of that Apple ecosystem, isn't it?
Right. It's not just about selling iPhones. It's creating this whole universe of devices and software and services that all work together.
Seamlessly. You start with the iPhone, then you add the Macs, the iPads, Apple Watch, AirPods, Apple Music, the App Store.
And it becomes really hard to leave once you're in, right?
Yeah.
It's convenient. Everything is synced. You've curated your apps. Switching is a pain.
Exactly. And that gives Apple some serious economic power. They have pricing power because people are willing to pay a premium for that experience, for that convenience. And then there's that network effect that comes into play.
The more users Apple attracts,
The more attractive it becomes for developers.
and that attracts more users. So it's a self-reinforcing cycle. It all adds up to growth and profitability.
And that move to in-house modem development, that fits right into the strategy, doesn't it? It lets them really customize and optimize the user experience, making the ecosystem even more appealing.
It's all about control and integration, something that's hard to match, even for their competitors. But, every company has its critics. Let's dive into Morningstar's Bulls Sabres Say section. They lay out some really contrasting views on what the future holds for Apple.
Always good to see both sides of the story. So the Bulls, well, they're clearly in love with the Apple ecosystem. They see it as the key to their dominance, bringing in massive profits and keeping customers loyal.
They're also impressed by their commitment to in-house chip development, right?
Absolutely. It gives them an advantage when it comes to innovation and potentially shields them from all the ups and downs in the consumer electronics market. And of course, they love Apple's strong financial standing and how they reward their shareholders.
So the Bulls are basically saying Apple has the products, they have the strategy, and they have the financial muscle. But I'm sure the Bears have something to say about that. What are their concerns?
Well, they're a bit more cautious, as you might expect. They worry about consumer preferences changing, how quickly things go from hot to not in the tech world.
Remember BlackBerry? King of the smartphone? And then poof.
Exactly. So the Bears are looking for any signs that Apple might be disrupted, just like they disrupted others.
That can happen to anyone, even the giants.
Right. And they're also a bit concerned about their production being concentrated in China and Taiwan, with all the geopolitical tensions in those areas.
Any disruptions there, and it could have a major impact.
For sure. And the final concern for the Bears, That increasing regulatory scrutiny, particularly in Europe.
Governments are definitely taking aim at big tech.
Absolutely. They're trying to open up that Apple ecosystem, which could impact their profitability down the line. So even with all their strengths, Apple's got to navigate these external forces that could shake things up.
Speaking of navigating, Morningstar often talks about economic moats when they analyze companies.
It's a great way to visualize a company's competitive advantage, right? It's that barrier that protects their profits from being eroded by the competition.
And Apple. They've got a wide moat rating. That's the highest level of confidence from Morningstar.
So if Apple's castle is surrounded by this wide moat, what's filling it? What are those barriers that make it so tough for others to compete with them?
Let's break it down.
First, there's that switching cost we talked about earlier. It's tough to leave once you're invested in that Apple ecosystem. Then you've got those intangible assets, things like Apple's design expertise, their brand reputation, and all that massive investment they've made in research and development.
Things that are hard to copy, right?
Exactly. And then there's that powerful network effect we talked about earlier. A large, loyal user base that attracts developers, which then creates more amazing apps, and that attracts even more users.
It's like a self-perpetuating cycle of success. And it all helps explain why they are so profitable and why they can generate those amazing returns for investors. But that brings us to the question everyone is asking. Is Apple stock actually overvalued, like Kerwin is suggesting?
Well, Morningstar did a deep dive into that. They estimated Apple's fair value at $200 per share.
Like $200.
Yep. But on December 6th, it was actually trading at $242.84. So that suggests, at least in their view, that it's currently overvalued.
Overvalued. Apple's been doing so well. What's Morningstar seeing that maybe the market's missing?
Keep in mind, Morningstar's taking the long view. They're projecting a 7% compound annual growth rate for Apple's revenue through fiscal 2029. They think the iPhone will continue to be a big player, but see services, like the App Store and Apple Music, growing even faster.
It's not like they're predicting doom and gloom, just that the stock price might be a bit ahead of itself, given these long-term projections.
Exactly. And they're factoring in that impressive profit margin expansion Apple's been seeing.
So squeezing more profit out of each sale, that's interesting.
Right. And that's projected to come from a mix of their higher margin products, like the iPhone Pro models and growth in those services, which tend to be more profitable, and their ongoing investment in R&D. That's expected to do more than just create new features. It's about reducing costs, too, especially in chip design and production.
A smart strategy for long-term profitability. But we do need to be realistic, right? There are always risks and uncertainties, especially in tech.
Absolutely. And Morningstar highlights 3 main areas that investors, or anyone really who's interested in Apple, should keep an eye on.
Give us those potential stumbling blocks.
First, consumer spending. Apple really depends on people being willing to spend, and that can be unpredictable. It's tied to the economy, to global events, new technologies, and even changes in taste.
Like those bell-bottoms we all thought were so cool? Trends change. Sometimes whole markets get disrupted. Apple, as powerful as they are, aren't immune to that.
You're right. And that's why the bears are worried about the potential for disruption. Apple did it to BlackBerry. It could happen to them too.
So that's one big question mark. What else is there?
Geopolitical risk. Apple's supply chain, like we talked about, heavily concentrated in China and Taiwan, which are hotspots for political tension.
It's a risk, that's for sure. Any disruption there could seriously affect production.
Not to mention the potential damage to their reputation. Reputation is everything for a brand like Apple.
Absolutely. So we've got consumer spending, we've got geopolitical risks. What's the third one?
Regulatory scrutiny. Governments, particularly in Europe, are really targeting big tech, and Apple's in the crosshairs.
It's like the Wild West is finally getting some sheriffs.
Exactly. They're concerned about Apple's control over their ecosystem, so they're trying to loosen that grip a little.
They want to open up the App Store, let users sideload apps, and even make it easier for consumers to repair their devices without having to go through Apple.
Right. It's a battle between control and giving consumers more choices. And while Apple argues these regulations could stifle innovation, the bears worry about the potential impact on their profitability.
It's a delicate balance, for sure. Before we wrap up this part of our deep dive, I want to touch on how Morningstar assesses a company's capital allocation. It's about how a company uses its resources to benefit its shareholders. And Morningstar gives Apple an exemplary rating. That's their highest mark.
Exemplary isn't something they hand out lightly. They've clearly been impressed with how Apple is handling things financially.
What are they doing so well?
Well, they're strategic about their investments. For one, they're pouring money into R&D to develop new products and streamline operations, and they've been incredibly successful with their fast follower approach to entering new markets like they did with the Apple Watch.
Patient, strategic, and they know how to win.
Right. Plus, they have that huge balance sheet. It lets them pay dividends, buy back shares, and just generally return cash to their investors in a way that keeps everyone happy.
Sounds like they've found a way to make both investors and consumers happy.
And it's not just about the numbers. Morningstar also likes what they see in CEO Tim Cook and Apple's board of directors. They see them as a team that is making those smart long-term decisions.
Sounds like we've covered a lot of ground in this first part of our deep dive into Apple. We talked about that recent analyst note on modem development, their overall business strategy, heard arguments from both the bulls and the bears, explored their economic road, and even got into their stock valuation and capital allocation.
And we're just getting started. In the next part of our deep dive, we'll really examine their financial performance in more detail. We'll look at the specific numbers that reveal those strengths and weaknesses. Welcome back to our deep dive into Apple. You know, it's not every day that we see a company receive an exemplary capital allocation rating from Morningstar. It's pretty rare.
Yeah, like getting a perfect score. It really shows how well they're managing things, how they're putting their shareholders first.
Exactly. And we've talked about some of those smart moves, those investments in R&D and their knack for entering new markets at just the right time, plus their track record of returning cash to shareholders.
It's a recipe for success, that's for sure. But we can't just focus on the good stuff. We have to remember those risks that Morningstar pointed out, right?
You're absolutely right. No company is perfect, and Apple's got some real challenges ahead. We need to be aware of those, whether we're thinking about investing or just following the tech world in general.
So let's break it down. Let's revisit those key risk areas that Morningstar identified. First up, consumer spending. Apple needs people to keep buying, and that can be unpredictable.
Consumer spending is fickle. It changes with the economy, with global events, new technologies, even just changes in what people like.
What's hot today might be old news tomorrow. Remember landline phones? Now everyone's mobile.
It happens fast. And the bears, those who are a bit more cautious about Apple's future, they're definitely watching this closely.
I bet they're thinking about companies like BlackBerry. That seemed unstoppable until they weren't.
Exactly. Disruption can come out of nowhere, even for giants like Apple.
So consumer spending, that's one to watch. What else is there?
Geopolitical risk. We talked about how Apple's supply chain is heavily concentrated in China and Taiwan.
Not the most stable regions, right?
Not exactly. The bears are especially worried about what's happening with U.S.-China relations, and any escalation involving Taiwan, that could really disrupt Apple's production, lead to shortages, delays, all sorts of problems.
Plus, there's the potential damage to their reputation if they're seen as too reliant on those regions.
Reputation is key, especially for a brand like Apple. Okay, so we've got consumer spending and those geopolitical risks. What's the third area?
Regulatory scrutiny. It feels like governments around the world, especially in Europe, are really cracking down on big tech.
They are, and Apple's right in the middle of it.
It's like the Wild West is finally getting some law enforcement.
That's a good way to put it. These regulators are trying to control what they see as Apple's excessive power, that tight grip they have over their ecosystem. Think about efforts to open up the App Store, allowing users to sideload apps, and making it easier for people to repair their own devices.
They're trying to break down those walls, give consumers more choices, level the playing field a little.
Exactly. And while Apple says these regulations stifle innovation, the bears are worried they could hurt profits. If consumers have more options, it might be harder for Apple to justify those premium prices.
It's a tug of war, for sure. Speaking of Apple shaking things up, what about their plan to make their own cellular modem?
That was big news. Dishing Qualcomm is a bold move. They've been the leader for so long.
It's classic Apple, though. Vertical integration, just like with the A-series chips for iPhones and the M-series for Macs.
It gives them even more control over the user experience, make sure everything works perfectly together.
They're really shaping their own destiny. But even though the full rollout isn't until 2025, starting with the iPhone SE, it raises a ton of questions. What happens to their suppliers? Will it affect the cost of iPhones?
Lots to think about. We'll definitely have to revisit this as things develop. But for now, let's see how Morningstar views Apple's business strategy, their overall outlook for the future. They've looked at how Apple makes money, where those profits will come from down the line.
Let's get into the nitty-gritty. How does this money-making machine work?
Morningstar describes it as a premium ecosystem, and that's the foundation of their success. It's not about individual products, but about creating this interconnected world, this seamless experience.
The walled garden. Right. You buy the iPhone, all your data is synced, you've got your apps, and switching to something else becomes a major hassle.
Exactly. And that gives them power, economic power. It gives them pricing power because people are willing to pay for that seamless experience.
And then the network effect kicks in. More users means a more attractive platform for developers, which brings in even more users. It's a brilliant cycle.
It is, and it's made Apple one of the most profitable companies in the world.
So the premium ecosystem is definitely working, but what are the key ingredients that make it so successful?
Well, there's their focus on design. Apple's always been about sleek, intuitive products.
It's more than just making things look good. It's about the whole experience. The hardware, the software, the interface, it all works together perfectly.
That design philosophy is in their DNA. It's in everything they do.
And their commitment to simplicity. They want their products to be easy to use, even for people who aren't tech experts.
Right. The technology should just fade into the background. It should be so intuitive you don't even have to think about it.
But when technology works that well, it's almost like it disappears. You can just focus on what you're doing.
I think that's key. Apple's not just selling gadgets, they're selling experiences.
Okay, so we've got design and simplicity. What else?
Control. They control the entire product lifecycle. They design the hardware, the software, and more, their own chips.
They're like a chef who grows their own ingredients, cooks the meal, and serves it in their own restaurant. Complete control.
I love that analogy, and that control is a big reason why they're so profitable.
And their retail strategy. Apple stores are more than just stores.
They're temples to the brand. They're all about creating that perfect Apple experience.
We've got design, simplicity, control, and those incredible retail stores. Anything else?
They're masters of marketing and branding. They've created this aura of exclusivity, of aspiration.
It's like owning an Apple product makes you part of a special club.
That feeling, that sense of belonging, that's powerful stuff. It's a big reason why people are willing to pay more for Apple products.
And that's hard to replicate, even if you have a ton of money and the best engineers.
You said it. Building a brand that connects with people emotionally, that's an art form. And Apple's got it down.
Okay, so we've got a good understanding of their overall strategy. But where do they go from here? What does Morningstar see as the big growth drivers for the future?
They believe iPhone growth will slow down, which makes sense. The smartphone market is getting pretty saturated. They see the real action in services like the App Store, Apple Music, Apple Pay, and in wearables like the Apple Watch and AirPods.
So diversifying beyond the iPhone, building up those recurring revenue streams from software and services, and tapping into those new wearable markets.
Exactly. And they're making big bets on things like augmented reality and artificial intelligence. Those are areas that could really change how we interact with technology.
Apple's always looking ahead, trying to anticipate the next big thing.
It's what keeps them interesting. They don't rest on their laurels, always pushing the boundaries.
And that's what makes this deep dive so fascinating. We're looking at a company that's incredibly successful, but also facing real challenges that can change everything.
Morningstar's analysis shows there are strong arguments on both sides. The bulls see continued dominance, while the bears see those potential weaknesses.
It's a high-stakes game.
It is. And in the final part of our deep dive, we'll really take a closer look at the numbers, the financial data that reveals Apple's true strengths and weaknesses.
Welcome back to the deep dive. We spent quite a bit of time exploring Apple, and now it's time to bring it all back to you, our listeners.
You're right, we can get lost in the details, but this is about giving you the tools to really understand Apple, whether you're an investor, a user, or just a tech enthusiast.
Exactly. So let's recap. We looked at their financials, and there's no doubt they are a money-making machine.
They are. But remember, Morningstar's analysis suggests that their stock might be a bit overvalued right now.
Right, that fair value estimate of $200 a share versus the actual trading price of $242.84 as of December 6th.
It really highlights the need to take that long-term view, which is what Morningstar does so well.
And their long-term projections, still pretty good. They see continued growth for Apple, driven by those iPhones, their growing services, and the wearables, which are just getting more and more popular.
Don't forget about their strategic strengths. That wide economic moat we talked about, the switching costs, the intangible assets, the network effect, that's tough for competitors to overcome.
That's a fortress. Tough to break through.
It is. But even the strongest fortress has weak points. We have to remember those risks we discussed. Consumer spending, those geopolitical tensions, and the regulators breathing down their neck. Those could all impact Apple's future, even with a strong moat.
No company is an island. Apple's connected to everything: technology, politics, the global economy. It's hard to predict what will happen.
And that's what makes this deep dive so interesting. It's not just about celebrating their wins, it's about understanding the challenges they're up against.
Exactly. So as we wrap up our deep dive into Apple, we hope you have a better sense of how they operate, why they're so successful, and the potential roadblocks they might encounter.
We always say, keep digging. There's always more to learn. Read about Apple, follow the news, and form your own opinions.
Here's a question for you to think about. Knowing what you now know about their modem plans, their strengths, those risks, even that stock valuation, has this changed how you see Apple? As a company, as a brand, maybe even as an investment?
It's something worth considering. Apple's story is far from over, and the next chapter will be just as fascinating as the ones before. And we hope you'll join us as we continue to explore the world of tech and business on future deep dives.
Thanks for joining us for this episode of the podcast Finance Daily. If you enjoyed our look at Apple, give us a like, share it with your friends, subscribe to the channel for more, and leave a comment with any questions you have about Apple or any other companies you'd like us to cover. We love hearing from you.